We're starting to get evidence that the delisting risk is pretty much off the table, and I'm starting to see some inklings of evidence that the zero COVID policies in China might be going away. And so while you guys smash that like button, let me run the intro. What's up, guys, and welcome back to the channel. And so there's two very important topics that I want to cover in this video. The first is that I do believe that the delisting risk is really gone. I think it's pretty much gone based on a press release or based on an announcement that was made today. And I'm starting to sort of like read through some discussions that have been made in Chinese newspapers or like just sort of like global reporting. And I want to explain to you why I believe I'm seeing the early indications of the zero COVID policies going away as well. And so let's start with this one. The Chinese security regulator pledges further opening up of capital markets. And so effectively what they're saying is that they want to push further institutional opening up of their capital markets. And the way that they're going to do this is that they're going to make efforts to lure more international financial institutions and talent to the Chinese capital market while facilitating overseas listing of Chinese companies. And it's that last point that's really important, because recall that this comes on the heels of China saying that they're willing to work with the United States for the mutual benefit of both countries. And effectively what they're saying there is that China and the US are global leaders and they should be friends. And it's not like they haven't said this before. Remember this, guys. This was from 2015, where President Xi said that he wanted to cooperate with the US when President Obama was in office. The same was said when President Trump was in office as well, but we saw what happened. And so you kind of have to take that with a little bit of a grain of salt. And I know a lot of people in the comments do say that. It's more like, don't listen to what China says, watch what they do. I'd also say the same for the US. Sometimes we push a little bit too much as well. And so we sort of have to make sure, or just watch the way that the governments of these two countries are operating. But right now, it just seems like they don't have the bandwidth to create more conflict. And so I really do feel in my gut that we're moving towards an environment where there's less conflict, despite the fact that the media keeps saying that the two economies are decoupling. I don't think they are, to the extent that the media wants us to believe that they are. And this is the regulator's article that I started off the video with. They're saying that they will continue to improve relevant institutional arrangements to further facilitate cross-border investment by domestic and foreign investors and better support cross-border financing of companies. And, you know, the real important point in all of this is that at the bottom where it says, Fang pointed out that the CRSE will support enterprises to go public overseas in line with the improvement of the market connectivity programs, like issues like global depository receipts and Chinese repository receipts. And so effectively what this is a strong signal of China bent on continuously pushing forward capital markets opening up. And so this is a huge shot at all of the people that believe that investing in China gives you effectively something that you don't really own because you own it through an ADR and it goes through sort of like a shell company, blah, blah, blah. But they would be shooting themselves in the foot if they didn't sort of make good on that gentleman's agreement that these are effectively real shares. And this is why I actually hold my Alibaba shares as the ADRs. I haven't converted them. I know that a lot of smart people have converted them. I just don't see the risk overall, but you guys might disagree with me, and let me know in the comments why you disagree. And note, guys, there's one other item that we got to connect to all of this. Why would the Chinese regulators come out on Saturday and make that disclosure or make that announcement? Well, recall, and I just listed a video earlier today, which I will link to, that there are rumors that the PCAOB has finished their on-site China work ahead of plan. And so they actually may leave in the coming days, which is well ahead of schedule. Now, take it from a guy who's gone through PCAOB audits, because as working for a Big Four audit firm in Toronto, Canada, we had dual listed companies that listed in the US. And so, of course, we had to abide by Sarbanes-Oxley and PCAOB audits. And really what the PCAOB audits are, just so that you guys know, is that the PCAOB audits the audit. So they don't do a whole nother audit. They audit the working papers, they audit the files. And so what they really do is they recommend improvements for your audits. You might get 40 pages of improvements for PCAOB review notes. But the point here is that I don't think these PCAOB audits of the Chinese company listed audits of the auditors who did the work is going to come back, or they're going to come back and say that the financial statements aren't to be relied upon. And so if that's not going to happen, then from my perspective, this delisting risk is gone. And if it was going to happen where they're saying, look, you can't rely on these audits, one, it would be company specific, and two, it would have been leaked already. And I just don't see that happening now. I could absolutely be wrong, but I'm just going based on my experience of having been a part of these types of situations, and also just understanding the media landscape. Of course, something that bombshell, something stating that all Chinese companies have to get delisted from U.S. exchanges as a result of this PCAOB review would have been leaked already. And also, why would China, after many, many decades of not allowing PCAOB audits, open up and allow it to happen unless they had already cleaned it up or know that these would be clean audits? And so that's my perspective. I do believe that the delisting risk is off the table, but I don't think this moves the markets on Monday as much as people think it will, and here's why. China is still holding strong to their zero COVID policy, and I don't think, once again, I wrote it right here, that the stocks jump on the delisting risk subsiding because of the remaining zero COVID policy risk. However, I do see early indications that the zero COVID policies are going away in China. I mean, it's very early, so things can change, but I just wanted to report to you guys what I see. So the article goes on to say that some recent media reports said that several railway stations in cities in South China, so this is very specific, have stopped requiring passengers to show negative nucleic acid testing results before boarding trains. And so those moves have led to speculations as to whether local Chinese authorities were relaxing requirements for nucleic acid testing, which is a signal that China is gradually easing their normalized anti-epidemic measures. Hu Yang, another official from the National Epidemic Prevention and Control Authorities, although he did say that China will adhere to its dynamic zero COVID strategy unswervingly, he did go on to say that they're going to be continually optimizing their anti-epidemic measures according to the changes of the virus's incubation and transmittability. So effectively, the way I read that is that they're tippy-toeing into sort of moving away from that one policy fits all or one solution fits all of the zero COVID policies. And so I think this is early indications of them moving away from it. I don't know what you guys think or how you guys read that. I might be misreading this. So I'm very interested to know what you guys think in the comments below. And as you know, why do I follow all this? Why does it matter? Well, here's my valuation for Alibaba. Alibaba has been beaten down because President Xi just took his third term. People are worried about zero COVID. People are still worried about delisting risk. I truly believe that the company's trading at approximately a third of its valuation. And remember, that $69.81 share price reflects $40 of cash. So is all of Alibaba, net of the cash on their balance sheet, worth $30? It doesn't make sense to me. I do believe that this company is grossly undervalued, and this is why I did triple down. Now, I did release a video earlier today where I explained that Michael Burry is actually starting to become a bull on Alibaba, and if you haven't seen that video, you can get to the link to it right here.